Good morning, good afternoon, or good evening from wherever you found us here at Icarus Signals. Welcome to another one of the Icarus Signals explanatory videos. This time we are reviewing the proprietary Icarus Continuation Signal. For those of you who have viewed some of the other videos, if in sequential order, you will have gone through the reversals and possibly the free reversals indicator. And we've arrived now at the continuation indicator, which is somewhat tied to, in its operation, to the Icarus reversals indicator in the way that it forms its signals and its price indications. You'll find that the basis of its creation is a little bit similar to the Icarus reversals indicator, although it helps, as opposed to, or inversely to a reversal, it helps us to better identify the continuation or even the beginning of a particular trend. Once again, we've got the pound hourly chart. Now, we've kept the pound hourly chart, or the GBP USD hourly chart, as our default. We will go through a number of other instruments over time, but we find just for the explanatory videos to outline the operation of the indicators, it's always best to be able to keep the same standard instrument settings, so that as we start to overlay each of the different indicators, we get a really good understanding as we work through each of the indicator overlays as to how they best apply. And it's a little bit easier to follow along with each of the different videos that you might be watching, whether or not you're working your way through them as a series or just coming in and viewing them as you see fit. So again, welcome to the Icarus Indicators continuation video. We've got it set up on the screen here with what looks like a little bit of a mess, frankly. We've got our long indicators measured with, or indicated, shown by the blue up arrows, and the same continuation arrows are shown on the short side, although in pink or magenta. Again, all of the colours are fully customizable for anyone who's using these particular indicators, but we've just left them at the default settings for now. This colour of the indicator is not all that important, frankly, to us as to how they work in real life trading. But again, if anyone's got particular preferences in respect of the chart setups, you're free to change those as you see fit. So giving a little bit of background as to how the continuation indicator came to be. Again, this is one of our older indicators which has been developed, again, probably around about 7 or 8 years ago. And we were trying to find something that would give us a starting point as to determining where we might be in the midst of a particular trend, be that long or short. Or, of course, in a sideways market where the indicators will disappear and give us a period of sideways action, not being denominated or displayed with any particular markers. So working our way through, we're going to open up the control panel, and we'll have a look at each of the different settings. Again, we're going to assume that viewers haven't seen some of the other videos which outline the different inputs, and we'll go through each step, regardless of sometimes the indicators being related or connected to each other in their operation. Now, remember, each of the indicators is always standalone. Purchasing or using one of the indicators certainly does not at all require you to purchase or use another. If you find that there's a particular indicator that works well with your particular trading style, the instruments that you trade, and it does mention the use or integration of a separate indicator within the video, or in fact in the inputs, rest assured that they're all actually inbuilt. So the code will speak to itself relative to each of those different tools. And as we work our way through the different videos and tutorials, you'll find that they're all quite well correlated in respect of or connected where they need to pick up on each other's features. So again, we'll start here at the WMA. This particular setting is a slope intensity type. So what we're trying to do with or what the continuation indicator is seeking to do is identify a period at which price is moving away from a defined slope intensity type. We want to find a particular point at the market where price has begun to pull away from a particular marker. And in this case, we're using the 32 period EMA. So we'll see here, we can change we might even actually zoom into chart in a little bit more detail just so we can get a bit of a clearer picture. We can see here marked in the aqua line, this is the 32 period EMA upon which the continuation signal is being generated. It very first shows up here on this bar, which we'll see pulls away quite rapidly and then closes at this particular point away from this continuation EMA, which again is marked by the moving average there. And it will then continue to populate at all bars which are above that particular anchor, that particular data point, until such time that it then becomes a little bit, or then starts to approach back towards the EMA, and then the filters kick in and the indicator is then no longer valid. And in this particular instance, we'll see that as it crosses back below the EMA, we then start to see triggers for the short side as it pulls away in the opposite direction, and the indicators then begin to populate on the chart. So we'll quickly flip back to the indicators list and we'll open up the settings and we'll work our way through and see how these work. We've got the EMA here. Again, as per a number of the other indicators, we have a full suite of functionality and customizability. We'll put in the linear regression measure just to give you a little bit of an idea as to the differences that will appear as we do those. And you can see, as is the case with the reversals indicator, the linear regression is a lot tighter when it draws this particular line onto the chart. It's much, much tighter in respect of the way that it populates. And therefore, with these particular settings, which we can tighten and loosen with some of the other settings, which we'll run through shortly, but we'll see we get a population, a much broader population of the signals on each of the bars. So we'll just revert back to the settings here, and we'll pop back in the EMA, which is something that we find is the best standing start. So again, we've got the 32 period moving average. This is what we're basing it off. And if we go and change that, for example, to say a 50 moving average, we'll see then that it becomes less populated. And in this particular instance, the first bar which populates a signal is this bar here. Now, previously it was this bar. This was the first bar to pull away from the 32 EMA. But as we then stretch out the EMA, the average or the average price exponential moving average of the price at that particular point, this now becomes the bar. So we require a little bit of a furtherance, a bit more of a continuation in price before these signals start to show up. We'll go into some of the other tools. I'll do it the easy way, of course. Excuse me there. We'll open this up. Now, again, we've got the threshold. Now, the threshold is really, as per what we've run through with the reversals and the reversals for indicator, this is really the sensitivity of the indicator to its appearance on the chart. So there's a number of different ways we can modify the sensitivity or the effectiveness of this particular indicator. And again, it's all customizable based on the time frames and the instruments that best suit your trading and investing style. And as you'll see as we work through these particular charts and these particular indicators, there's a very, very broad range of settings that you can suit, which without curve fitting seem to work well on a very, very broad range of instruments. And when you receive or when you download these particular indicators, you'll find that what we found to be some of the more fitting settings are locked in as defaults. But again, it's all fully customizable and you can feel free to adjust those as you see fit. And we're quite confident that you'll find as you start to drop them in on different time frames that there'll be a particular type of setting that suits almost every trading style and instrument type. And again, if you choose then to do back testing as to its effectiveness, we'd welcome the opportunity to help you with that sort of thing too. And of course, you're free to use the indicator as you see fit. But we will, for the sake of outlining the use or the application of this particular indicator, we're going to change the slope intensity threshold, and we're going to make it a little bit more difficult for this particular indicator to show up because we want to see it pulling away further from the moving average. We'll go back to 32 for the EMA just because we know that that's a fairly useful structure, and it also too which we'll get to in a moment, reflects quite well on the reversals indicator, which is going to help us identify some of the filters where the continuation strategy, the continuation indicator, might be well ignored with the appearance of another Icarus indicator, being the reversals and a range of others. So combining a number of them together, we find provides some really wonderful signals. We're going to pop in a slope intensity threshold of 16, asking it to go a little bit further before it starts showing us some of the signals. And so we'll close that out there. And again, we'll see that a few less started to appear. We might do that once again, and we'll make it even more difficult. We'll just move this over here so we can all sort of see where some of the more populated areas are going to be adjusted. And we can see there, we've got this particular move here, which seems to be a very strong trend, although on the short side, there's been quite a few removed. We'll zoom out to the current period, which has had a very, very strong trend down. And we can see that with these loosened, or I should say, loosened or tightened setting, depending on which way you look at them, we've had a fairly large pull away from the EMA here at the bottom of this range. But as we go and change the settings back to something which is a little bit more active, we're going to find these show up quite early in the piece. We're going to change that back to 0.12. We might go 0.10, give it a little bit more activity. And we can see them start to show up there all the way from the very, very top of this trend, where the first bar that pulls away then travels from around about 133.70, or 133.40, pardon me, all the way down where we still have signals appearing some 380, 390 pips later, with no sign of easing up. We're going to have a little bit of a look now at some of the other elements, which will help us again clear out some of the noise. We might just zoom out so you can get a really good understanding of how these indicators apply over the longer term. So again, we can see the indicators populating our long and our short arrows here with pretty strong effect. We'll notice here as well, which we'll work towards in a moment, clearing out some of these noisier elements, which again still provide some very, very good indicators, particularly when they first appear. But in these bands of sideways action, which we always want to try and avoid when taking directional trades, some of the option traders might like to write some strangles or straddles in those particular periods, and we do have indicators which suit quite well for that particular thing. But for this particular point, we'll stick with our long, short equities and foreign exchange, just to get these directional trades identified on the chart. But again, zooming out, we've got some very, very strong trends here where this first shows up after clearing and then continues to travel fairly uninterrupted, except for these two particular points here, which when we have some fairly decent drawdowns through, but a quick snap back up above, we might even draw it from this point where we've had no interruption at all the way from sort of the middle to the end of July 2020, all the way up to the highs here with let's say the appearance of the next short candle is some 320 pips away. So you can see just from eyeballing the chart that the long and short clusters do a very, very good job of identifying trends. But as always, what looks to be something very useful on the chart needs a little bit more brain power and a little bit more consideration as to how we can best take advantage of these. And obviously, as we start to see clusters of these appear, often they'll appear at the top of a particular run. So as the market extends up beyond the moving average as the marker for what's creating these signals, they'll then revert back or reverse back into closer into the market, and then off they go again. So we want to try and find a way to, one, avoid taking long trades at the top of these ranges, and identify how we might be able to, one, pick up at the start of the range, as we've identified here and a number of others, and of course here on the short side. But at the same time, how we can also avoid picking up too many trades towards the end of a particular extension. So we'll get into some of the different tools that the continuation signal's got to be able to do that, and we'll work our way through how you might be able to apply this particular indicator to your trading style and your preferred instruments and get the very, very most out of it. So we're going to leave our actual indicator settings, our thresholds and our intensity settings as they stand. Again, you'll notice that we've got the preemptive mode, which is something that the viewers who've seen the reversal strategy videos are going to notice. It's just a tool that if you're sitting in front of the screen and trading discretionary or live, particularly on some of the shorter time frames, this preemptive setting is going to allow the chart to pre-populate a bar to allow you to get prepared for the open of the next bar, if indeed the rest of your trade rules are met. It just means that you can sort of get prepared for a number of different instruments that you might be watching, and if the signal is starting to generate or has a very high likelihood of generating at the point at which it's being measured, this particular setting says that once it's 80% complete, it will print if indeed price remains where it should or closed above or below where it should, and then the signal then will remain. So it's just a little bit of a trader's tool to preempt the ability to place some of these trades. Now we'll scroll down here to the next component. Before we do that, what we'll do as one of our filters is we'll look at this consecutive signals. Now this is actually a very, very important signal. We've got this set to 1, which basically means as soon as the bar or price moves to the threshold set by the continuation indicator, we're going to get the print of a signal. So using an example here, we'll find that this first bar here, I might zoom in just to get a little bit of extra context. You have to excuse this jumping backwards and forwards. This is going to help us see it a little bit more clearly. So we'll open up the indicator again. Excuse us going backwards and forwards. And we're going to focus on this particular period just here. This is probably a very good example. So the very first time that price moves away from the EMA values that we've set by a margin greater than the threshold that we've set is going to be this bar here. You'll see we had a very strong move up, and it's closed then above this threshold of 0.1, above the 32, in this case the EMA. Now that's going to be the very first signal. So we're going to find that we're going to start taking trades here from this point onwards, depending on how your strategy works. Let's say, for example, we've got consecutive signals of 1. Now what we prefer to do, or something that I've found to be most useful, in order to clear out the noise, to start with, we're going to set that to 3. And what that basically does, and that can be any number you choose, but once you start going above 5 or 6, depending on the different intensity thresholds, you'll find that the signals start to disappear altogether. But there is a way to bring those back, and we're going to get to that later on, where you might find that consecutive signals is increased and threshold is decreased. That's going to give us a unique situation to have a look at on a number of different charts, and it helps again for you to customize the application of these indicators to your particular trading style. So we're going to drop 3 on there, and then we're going to have a closer look at what happens. Now, this is the first bar, second bar, third bar. We're going to see the signals first appear here in this instance. And there we go. So it's the first bar, the second bar, and the third bar here is now where we see them first. This helps us get a little bit of an indication that the trend is indeed confirming, and that there is a number of probabilities that are set to increase that particular situation. Now, what we'll also find is that you might, with particular settings, get to a point as we zoom out, we'll find that this starts to pick up the point at which price then extends away from the EMA and then slowly starts to revert back. So they become somewhat false signals. We're going to zoom out a little bit again, just to get a bit of a better idea of that. We can still see that the strong trends are picked up very, very quickly, although there are isolated bars, which we'll get to filtering out in a moment, like this one here on the short side, where price has drawn down past the allowable threshold. We've got a particular trigger, and then price has then quickly reversed back. So often what we'll do is we'll set our continuation rules or entry rules to be a close beyond the appearance of the first signal. And in this case, this is our first signal here. We'll zoom in just to have a closer look. This is our first signal here, and then price has basically gone nowhere near the low and continued off the other way. We found a similar example here. This is our signal. Price has gone nowhere near the low and traded straight away from that. So there's quite a few other examples of those when we see these singular bars that do this, and we'll zoom out to try and find them. It's always good we find when we're looking at new indicators or strategies to try and find areas where they don't work, as opposed to trying isolating where they do work, because that gives us the opportunity to be able to filter them out and make the very most of them in respect of how we're building our strategies. So there's a few here that we can have a bit of a look at, which will be good examples. Once again here, we've got ourselves a signal which shows up but again, very quickly it reverses. And again, these two here. We've got the signal shows up, price then pulls away and doesn't confirm that we're going to go any higher. There's these two here as well. We wouldn't have, if we're assuming for closes above the previous highs, taken either of those or this third one here. The shorter ones, again, these don't, this particular trade here would have been picked up because we traded below. The subsequent one would not have, but again, we then see a continuation further down with it being confirming signals. So we prefer to keep them as between, any of the, depending on the building of the strategy, any of the signal settings will work quite well for particular strategies depending on how you trade. But we find between 2 and 4, generally speaking, a good way to be able to identify the signal settings which will work more actively as we go and build it. So we'll leave it at 3 for the sake of the exercise. And now we're now going to work towards moving or removing some of the noise throughout the chart. And those who viewed the other videos will notice that we have the Icarus Boliband Change Display Indicator. Now, we found that with the application of a number of the proprietary Icarus indicators, or Icarus Signals indicators, I should say, that when we have the appearance of a reversal or a continuation signal in particular, when we want to try and give them the very best chance of being successful or high probability signals, that the Bollinger Bands, or the state of what are technically the Bollinger Bands, is going to be a wonderful overlay for us to be able to clean out some of the noise. This is why we've developed the Icarus Signals Boliband Change Display, and it helps us to better view when the bands are contracting or expanding. Obviously, with the reversals indicator, as the Bollinger Bands are continuing to contract, the Icarus Signal Boliband Change Display Indicator is going to visually represent the point at which those bands are then compressing. And any of the signals that appear within that field are going to be regarded as a much more high probability trade. Now, when we're looking at in the continuation, understanding that it's the inverse of the reversal, we want to only display those signals that are going to appear when the Bollinger Bands are expanding. That basically means when we look at the Bollinger Band Change or the Boliband Change Display Indicator, we want to see it shaded typically green is how we like to draw them, and you can see that at some of the other videos. We haven't integrated them into this particular video at this stage, but we can see them in some of the others further down, and particularly with the actual Icarus Signals Boliband video or tutorial. And as it begins to expand, it gives us further conviction that price is going to be moving north or south. It could be expanding going up or, of course, expanding going down. It gives us a little bit of added conviction that there's strength in that particular move. So when we see the continuation signal show up in that environment, it helps us to understand that that might be a more active or more well-defined confirmation. So let's put this on now. We've got these signals being shown without the Bollinger Band, the Icarus Signals Boliband Change Display Filter working. We're now going to set that to true. Basically going to draw a 100-period Boliband with expansion and contraction set to 0. Now, we will go through these quickly in this particular video just to put in a range of different values to help filter out some of the noise, filter out some of those erroneous signals. Although when you go to the Boliband Change Display video, it'll give you a much better understanding of how they actually appear on the chart. So if we go and change that to true with the 100 period, we'll notice that a lot of these in the sideways price action areas start to disappear. So these here are quite strongly moving areas. We might actually zoom out to get a little bit of a better understanding of that. This is probably a good area here. We have a very strong up move with a range of these signals showing up when the price really starts to move. We're going to open up the indicator again and we'll edit that. And just for the sake of being able to see it more clearly, we're now going to turn the filter off. And we can see a much larger amount of signals appear. Now, you'll find that some of the signals during the up move will have appeared or disappeared. That's because the Boliband Change Display, being based on John Bollinger's original Bollinger Bands, are backwards looking. So they work from a little bit back in time. A way for us to be able to address that is to look at the rate of expansion and contraction. Now, there's 3 different states of the belly band change display. We have expansion, we have contraction, and then we have nothing. That means that there'll be a shaded area for each of those particular environments. And then we can build strategies around having expansion, having contraction, or having activity take place in expansion, contraction, or sideways or nothing movement. But we'll just change this to 5%, requiring that the Bollinger Bands or the Bolly band change display is populated when the bands are moving away to a degree of 5% over the previous period. We'll set that there. We'll leave that at 0 so it's a little bit clearer to see. We're going to say true. And again, we can see those start to clean out some of the messier areas and the sideways areas. So one more time, just for us to get a little bit of a clearer picture, we'll open up this. We might even, for the sake of the exercise, we're going to set the Bollinger Band period to 200, which will start to filter out even more. We really only want to see the very, very strong signals. So we'll set that to 0. It means that a much longer period, we want to see a much longer trend, and we can then see where they show up. So again, we can see here very, very strong indication, a very strong indication from here up to north of about 170 pips. There's a very, very large one here that was a strong move. We'll go to the current period, which again shows a very strong move up, very strong move down, which we're in the midst of at the moment, and we're quite well filtered out there. So that gives everyone a little bit of an understanding as to the Icarus Signals Continuation Indicator. It's been a very, very useful tool for us to be able to pick trends, particularly when overlaid with some of the other indicators, which you'll find more detail on in some of the later videos. Of course, if you have any questions, feel free to shoot us an email or drop us a note. We're more than happy to work with you on how we can help you integrate the Icarus Signals indicators into your trading and investing style. And of course, if there's any requirement to look at backtesting or coding using these particular indicators within some of your different trade ideas, we'd love to hear from you on that as well. So happy trading, happy investing to everyone. And please take the time to watch some of the other videos further down the page. Give yourself a much better understanding of the benefits of the different Icarus Signals proprietary indicators and how they might apply to helping you improve and increase the probability of successful trade entries and exits. And then one last thing, just before I forget, in fact, another filtering tool. I almost forgot to give you some of the best part. Now we've got here our continuation signals. Now we notice, as I mentioned earlier, that there are a number of areas where we start to populate signals at the very top of an extension. Now, obviously, we want to avoid taking these, and we would hope that when we build our strategies, we start picking up the start of these trends. But a good way for us to determine when these indicators might be getting a little bit stretched is to overlay our reversal indicator. Now, if you haven't gone and seen the video, I would suggest you scroll back into the marketplace page and take the time to watch those videos. You'll see the similarities or the basis upon which both of them have been developed. And as we drop these in, I want you to have a look at how when the reversals indicator is populated over the top of the continuation, that the appearance of that reversal indicator is a very good indication for us that the continuation is best if long to exit and if short to exit, depending on the appearance of the inverse entry or the inverse signal. So one works hand in hand with the other in that regard. And we're going to load up some previous settings that we've got which work quite well. We're going to use the one that's matched to the continuation. We can see here 30 and again 16 is the threshold. All of these settings you'll know if you've watched the earlier videos. Go ahead and take the time to do that. And there we go. So we'll notice here that as these reversals indicators begin to show up in the midst of our continuation strategies, they provide a very good indication that it might be time to start considering closing the order, closing some of the trades, or indeed tightening up our stops or adjusting some of our stops to take into consideration the different environments that we're in. We consider again some of the elements that were outlined in the reversal video, where the failure of the reversal signal is indeed often a confirming entry. So when we have the overlay of those two, it gives us a very good understanding as to where to start applying some caution. What we'll do for this particular area here, because we have the settings locked or matched to each other quite closely, is we're going to make sure that we can then extend out the threshold and give these continuations a little bit further to run and see where they then start to show up. We can see here that after having extended a long way, before we start to close, these are really the points that we want to start to consider adjusting some of our entries. So hopefully that gives everyone a little bit of an idea of how those two indicators might be able to work together, how they're related, and how they're going to give you the opportunity to pick up some high probability trades and build strategies that, as we mentioned before, best suit your particular trading style and help you ensure that the equity curve that we're all looking to build moves fairly steadily from bottom left to top right, which is the ultimate goal for why we do this. So again, I want to thank everyone for taking the time to come and have a watch of this particular video. Please take the time to watch some of the others. You'll continue to find that as we overlay one indicator with another, that we get ourselves a really strong basis for being able to put together some confirming biases depending on your time frame, your instrument type, and working on time frame. Before we go again, we're going to apply some of these indicators to the longer time frames, which they work just as well. Again, we can see strong trends down. Again, some very strong trends down here. We have fairly loose settings in this regard, but we can see that when price starts to pull away, they get picked up quite strongly. So again, this is on the daily time frame. We'll even scroll back to the 15, where we can see it become particularly effective. Keeping in mind the shorter time frames, we might want to see price revert back to the EMA as the entry signal. But again, there's a number of instances where the population of these particular indicators starts to give us an idea that indeed we're on for off to the races, as they say. Current period's very good example of that. So we'll scroll back to the 1 hour. Hopefully everyone's enjoyed that video, and as we said before, feel free to shoot us a note, get in touch, let us know what you think, and we look forward to speaking with you in the not too distant future. Thanks again.